The Bitcoin miner and accumulator, Mara Holdings, knows all too well about the drop. Its own stock down more than 36% so far this year. Nearly 28% of the float is shorted. With more, we head to Paris and to Fred Thiel. He's chairman and CEO of Mara. Fred, good to have you on the program. The decline in the asset price this year, certainly, $126,000, that was a major high earlier this year. That was a big moment for the cryptocurrency, but down close to 30 or more than 30% from that. How much lower does Bitcoin go?
I think Bitcoin at this level is finding support in the kind of 84,000 range, which is just about where the break-even point is on most ETF purchases, Bitcoin ETF purchases, and that seems to be a level of support where essentially people, large investors who are trying to defend their positions, if you would, want to keep it above that level, which if it falls below that, you'd see more sales most probably out of the ETFs back into liquidity. Bitcoin, it's very much driven by global liquidity. You had expectations of more from the Fed and more clarity around market structure. But I think what you really have to look at is there was a huge run-up in the kind of August through September into October period. And, a number of us felt the market was frothy in the beginning of Q3 and things were getting a little bit overheated. And, now we've seen some of that come off. You've also seen a lot of money that rotated into AI, now rotating out of AI and starting to rotate into more DAO stocks. And so I think you're generally seeing a risk-off environment. Risk-off tends to drive people out of Bitcoin. But the liquidity that the federal government is going to inject in the marketplace, now that quantitative tightening is over, we're starting to see easing again. We believe that will bode well. The dollar's down, which also bodes well for Bitcoin. And I think you're going to continue to see Bitcoin appreciate. But you've got to realize it's a very large asset class. It's a couple $1 trillion in size, and it takes a lot to move the price. And I think what we're seeing now is just some healthy retracement.
Hey, if I may, just jump in for a moment. I am wondering, Fred, you say that it's a risk-off environment, and yet I'm looking at an S&P 500 that's still near its all-time high. We've seen quite a bounce back when it comes to the S&P 500, also a very big market. So I'm just curious, how do you square that if we're seeing investors still willing to move into the equity markets but not crypto, that disconnect?
Well, I think you have to, in regards to crypto, you have to look at the derivatives market, which is much bigger than the actual spot Bitcoin market. And you have to see the sheer amount of leverage and positions that have come off since the peak. You've gone from the $90 billion-ish range down to the $30 billion range of open positions. And so that's a huge amount of leverage that comes off, which essentially sucks wind out of the marketplace. And people have been moving their money out of Bitcoin and into other things. I think you've also seen, look at the AI stocks. Most of the second-tier AI stocks have all seen a pretty large come down since the peak. Even stocks such as Oracle, look at CoreWeave, look at these stocks and how they've performed. And I think what you're seeing is a rotation out of some of those and into other stocks. And Bitcoin is associated with technology. It's associated with the risk on assets, and it's very associated with liquidity.
So having said that, and you talked about the run-up that we saw earlier in terms of crypto, that where it got to maybe like frothy levels, we're now at 87,000 and 87,302 and change. So what do you think should be the level of crypto that makes more sense?
Well, I think you have to look at the long-term trend. But more importantly, go back a little over a year ago, go 14, 15 months ago, no U.S. money center bank would deal with crypto-related companies, nor would they take crypto deposits, nor would they let you trade crypto, nor would they let you wire money to crypto exchanges almost. And today, you have every bank, including JP Morgan, now moving ahead and doing all sorts of things with crypto. You're seeing tokenization of assets. DTCC has now gotten a no action letter from the SEC around tokenizing assets. You're seeing all sorts of activities around the traditional finance environment where they're embracing crypto. And I believe that what part of the effect of that is you're now going to see all sorts of things wrapped around crypto, which will make the space much more relevant. But it takes time for those products to take effect, get launched. And I think, again, Bitcoin has had a great run. Over the past 15 years, it's been one of the best performing assets on record. And I think that we're going to continue to see great performance out of Bitcoin over the coming years.